Welcome to Megatrade 101's video presentation of the foreign exchange market. Today we'd like to show you the US dollar index. For starters, as simply have indicated, even on the opening of the week in the Asian market prior to North American sessions, that the opening of the US dollar index here have been much lower than the previous closing. Let's see if we can get the information here. This is a technical chart on the US dollar index on a weekly basis, where last week, basically at the end of September 10th, the closing prices on dollar index was at 82.87 here, and opened for the week of September 13 to the 17th, opening at 80.82, which basically dropped much lower from the closing price of the previous week. And this is prior to Bank of Japan's intervening in the market yesterday. So we're looking at a much anticipated dollar movement lower, which would have caused a probability for the Bank of Japan to intervene in the market, simply because the opening price on the dollar indicator have been much lower from the closing price, and prompting probably some of the technical analysts from the Bank of Japan that this may trigger an 82 to 81 level for the dollar yen to move lower, in exchange for the yen's value to much higher grounds within that 15-year high, which has been hurting the exporters, prompting the Prime Minister of Japan to be more pressured to do something in the market. Now, let's look at it more on a technical basis, where it made a low at 81.0504, and this trend line of support has been quite stable, prompting the dollar index to correct itself on a slight recovery back to its current price at 81.43. However, if you look at it on the overall picture, this looks more of a head, a left shoulder, and a higher right shoulder, although this particular neckline and these levels at 80.35 would be I would say a good support. However, this neckline may be broken or penetrated simply because there is no actual sign for the US dollar index to recover. So looking at it below 80 basis point for the dollar index to move lower would be a key price. And besides, the momentum here has been real slow. Slight gain on the momentum on a weekly basis with lowering prices would already give you an indication that a much anticipated dollar to move lower would still be intact. With that said, here we have the euro dollar, the pound cable, and the euro pound on a daily basis, with comparisons as to why the cross rates for the euro pound would have been a better trade, although the tempting movements of the euro as well as the pound have been quite dramatic simply because of the volumes and the momentum that it has been gaining. Here you could see that the euro is back to the price level of 1.3067, okay, with a high of 1.3069 on a daily basis. But if we try to look at it on a weekly, it is actually working on the high side, and the previous high here was at 1.3333 for the pound. And looking at it, comparing it with the euro rather, looking at here with the pound now on a weekly basis with the previous high of 1.5996, although the pound is actually still pacing the euro. And with that said, going back on a day-to-day intraday basis of trading, looking at it with a correction here with a low of 1.5536 for the pound, while the euro already have gained its momentum back up, prompting the euro pound to move higher, which it did made a slow back to its 21-day moving average at 82.82, which it attempted last night for the pound, euro pound rather, to correct itself from a previous high of 0.8388, which at these current levels it is attempting to penetrate such resistance prices. When you look at it on a weekly basis here, then it is right near the 0.8402 21-week moving average. And looking at it now, then it is right at the middle of this channel with a possible high at 84.75, and looking at it at this levels would now be much higher with the Williams percentage range at minus 18, momentum at 101, the RSI level at 61, and volumes with at 34,835 on a day-to-day basis, which is still quite small. And as long as the euro would continue or maintain its price levels, but the behavior of the pound would still be slugging behind the euro, then the euro pound cross rate would prove to move higher with enough momentum, targeting its first objective at the 0.8450 level for the week. It's only Thursday, and closing of the week would be dependent upon enough volumes and momentum in the market, although this price level would be within reach between the closing and the first week of trading next week. Thank you very much, and have a pleasant day, and good luck on your trading.